Welcome back to the channel, and for today's video we have stock ticker symbol ASML. The stock was at $875 just 2 days ago before plunging down to lows the day before at $720 and then dropping even lower today down to $677.
Nobody knows if the stock is going to go up, down, sideways, or in fucking circles.
Within 2 days the stock has dropped from $875 to $675. Off of what? What type of news? What type of earnings? What happened? Well, the stock did report earnings this morning at 8 a.m. They reported earnings, and the stock, well, really didn't do too much when they reported earnings. There was a small little spike here, but a lot of the momentum and movement happened yesterday. Why is that? Well, around this time, around 10 a.m. yesterday, the stock was trading just like normal until it plummeted. It dropped from 870 down to about 740 within 20 minutes. The stock lost about $80 in value. Insane drop. Why did it drop? Well, there were leaks of the earnings that were supposed to come out at 8 a.m. this morning, which the earnings came out at 8 a.m. this morning, but there were a bunch of leaks and numbers that were reported that said the earnings report was going to come out lower than what was expected. And well, at 8 a.m. this morning when the earnings numbers came out, it was a lot lower than expected. But what does that mean for you as an investor or trader moving forward? Because this is a very, very hot stock. This is one of those big tech type names that you got to follow if you want to trade off momentum when stuff like semiconductors like Nvidia and AMD are trading well. It tends to trade with those type of sector movements. And the stock itself was on a massive rally from October of last year when it hit $550. It bounced off this support area and jumped all the way up to all-time highs over $1,100. That is a massive movement, and every single earnings report caused this stock to go up until this most recent one in July when it plummeted from $1,100 down to $700, $600 area just weeks following that. And then we tried to recover a little bit, didn't get anywhere, plummeted again down to the downside. Now we're having yet another massive pullback on the stock, as you can see here. But something I want you to take note of, every time there's a pullback, and this is what the overreaction correction type of plan comes into play. There's something when something overreacts one way, it tends to correct itself back to the other way. That could go with either stocks moving up or down. If stocks tend to rally too much in a short period of time, there tends to be some sort of pullback after, right? And if the stocks tend to fall to the downside too quickly, there tends to be some buyers that like to jump in and push the stock a little bit higher in the short term following, just because the overreaction in the stock market causes the stock to move one way too strong. It tends to reverse back to the other side, whether that's up or down, causing it to get more movement and get more volume moving around in it. But what that means for you guys as traders is that anytime there's been some sort of massive overreaction to the downside, you can see that there's been a correction back to the upside. So any massive downturn has kind of turned back into another upturn. Any massive downturn goes back into an upturn. And you can see that many different times. Now the same goes for a stock rallying and then pulling back. Now we had a massive rally here from $875 all the way up to $1,000 and then pull back sharply. Same thing here, we had a nice little rally and a pullback here. A strong pullback here off our earnings, tried to recover quickly, another pullback here. So you can see that the stock tends to sway very strongly from one side to another. What I like about that, though, is that right now we're in a prime spot where this is pulling back right now, which is going to give us a great trading opportunity because this will reverse back to the upside. Whether it reverses now at $680 or waits another couple weeks down closer to the 600 area of support, there's really no telling when it's going to reverse, but there's going to be a time when this stock has its next big rally, because like we talked about, anytime it pulls to the downside or moves up to the upside and rallies, it tends to move the other way days or weeks following that move. So we're going to watch this very closely because, like I said, it was a very, very strong move to the downside. It dropped from $882 right here, all the way down to $670 today, even lower than that going into after hours. So I really want to see what happens moving forward. We are in this gap right here with not much support and resistance showing until we get closer to this $600 area down at the bottom. So because of that, I want to see if we can pull back a little bit and then we buy into some shares. If you're playing this thing short term, which is mainly what I'm looking at here, I'm not really going long term with it, but playing that short to mid swing type of trade is most ideal. So what you do is you buy in some shares around the 660 to 680 range, just a couple shares, build into your position. Let's say you want 10 total shares, buy 2 to 3 shares now at 660 to 680. It drops a little more, buy more at 650 to 640. It drops a little more, buy a couple more down at 640, 630. Keep buying more until you have your full position. Let's say it gets closer to that 600 area and you start to see it stabilize out, buy a couple more shares because you see that support kicking in. Once we start to see the reversal back to the upside and we start to see the rally happen, by time then you started buying shares at 660 to 680 all the way down to 600. Your average price is probably somewhere at 630 to 640, and with that bounce off of 600, you start to see this thing rally back closer to 720, 740, 780, up closer to $800. You start to see that rally back up to the upside. Now it may be a short-lived rally, but it's a rally nonetheless, and that quick profit will allow you to make a great trade off of this. That reversal back up to the upside, which we're expecting to see, whether it's tomorrow or several weeks from now, it's going to happen. We're waiting to see what's going to happen. We're going to wait to see this stabilize out. Ideally, I want to see it stabilize out somewhere between 600 and 650, stabilize out somewhere down here, and then start adding some shares anywhere below 650. Even 660, 680, where we're at right now, is not a bad area to start adding a few shares. But if you're trying to get the 10 shares, start adding now. Buy a few shares along the way down. You're not buying a falling knife because you have done your research and you believe that there will be a reversal. I believe there will be, and that's why I'm going to do this trading plan. You don't have to. There's no guarantee it's going to reverse back up to the upside. But in a trading scenario like this, I'm going to confidently bet based on what I know about the stock, what I know based on what was reported, and more or less what tends to happen with stocks like this is it's overreacted to the downside, tends to be corrected with a reversal back up to the upside. So I know this is a quick video, but I just wanted to get that information across to you guys that you really should take a look at this stock ticker ASML. There's a lot of potential for the upside on this one, but we just have to wait for our turn. Let me know what you guys think about the stock in the comments down below. Leave a like and subscribe if you're new.
That's it. Name of the game.